Bills receivable is an asset, bills payable is liability. So where do you record this? This in the balance sheet. In your final accounts of partnership firm, what are the accounts you have to prepare? So you have to prepare your trading account, profit and loss account, profit and loss appropriation account, partners capital account and balance sheet. Where do we record insurance? Insurance in the P&L account where you have to minus, and in the balance sheet it is an asset. So you have to record in the asset side of the balance sheet. Hello everyone, I am Harshita, lecturer, Department of Commerce, Vidhyaashram First Grade College, the Temple of Excellence, Mysuru. My dear students, today I am in the fourth session of your Unit 1, that is Final Accounts of Partnership Firm, and this is for second sem B.B.A students of Mysuru University, and the subject name is Financial Accounting and Reporting. So already in your previous sessions, I have discussed all the theoretical aspects of this particular unit, as well as we have solved two 15 marks problem, that is your previous year question paper problem, which is very important for 15 marks. And in today's session also, I am going to discuss one more important problem, that is they'll ask for 15 marks under your part C in your question paper. So this is a very important question paper problem, or the problem you can expect in your question paper for 15 marks under part C. Okay, so if you go through your previous two sessions, so I have exactly discussed the question paper problem which is given by your Mysuru University. Okay, so we shall begin your question here, that is from the following trial balance of A and B sharing profit and loss in the ratio 3/5 and 2/5. So what would be their profit sharing ratio? 3:2. Prepare trading account, profit and loss account, profit and loss appropriation account, partners capital account and balance sheet for the year ended 31st December 2020. Now, in your final accounts of partnership firm, what are the accounts you have to prepare? So you have to prepare your trading account, profit and loss account, profit and loss appropriation account, partners capital account and balance sheet. Okay, so this much you have to prepare for your 15 marks. Now no need to worry, already these concepts you have discussed in your PUC. So in your first PUC you have learnt about final accounts of a sole trading concern, where you have learnt how to prepare your trading as well as profit and loss account. In your second PUC, coming to your partnership, you have learnt about your profit and loss appropriation account, partners capital account and balance sheet. So here you have to recall it once again, combine those two and you have to prepare for 15 marks. Okay, so trading P&L account, P&L appropriation account, partners capital account and balance sheet. Now, in the question, they'll give you the trial balance as well as certain adjustment. So, by going through the trial balance itself, we shall see where these accounts has to be recorded, because if you have gone through two previous sessions, so you will be able to identify where these accounts has to be recorded. So, we shall see now and we shall identify where each and every account has to be recorded in your solution. Now coming to your first two, that is A's capital and B's capital. So where you have to record under partners capital account. So you'll record in your partners capital account. Next, A's drawings and B's drawings. So where do you record these two? So this you have to record under partners capital account. Once again, in your partners capital account, you have to record this A's drawings as well as B's drawings. Next, sundry debtors, plant and machinery, fixtures and fitting. These are all capital item which comes where? In the balance sheet. Next, stock they have given, even though it is an asset, but they have given the opening stock 1/1/2020. So where do you record opening stock? In your trading account. Cash in hand and cash at bank, these two are current assets. So where do you record? You'll record in the balance sheet. Next, purchases. Purchases you have to record in your trading account. Next, wages. So wages is a direct expense, you have to record in your trading account. Salary is an indirect expense, you have to record in your P&L account. Next is bills payable and bills receivable. These two are capital items and one is asset. Bills receivable is an asset, bills payable is liability. So where do you record this? This in the balance sheet. Insurance. Insurance is an expense, so it is an indirect expense, so you have to record in your P&L account. Return from customers, which means that sales return. Sales return, where do you record? That is in your trading account. Carriage inward. So it is a direct expense, you have have to record in your trading account. Return to creditors, which means that purchase return, so you'll deduct from the purchasers in your trading account. Commission and traveling expenses, so it is an indirect expense, profit and loss account. Rent rates and taxes, trade expenses, discount, bad debts, so all these comes under where? In your P&L account, profit and loss account. Okay, next we have sundry creditors and loan. So these two are what? Liability. So you have to record in the balance sheet. Next, sales they have given. So you have to record in your trading account, that is in the credit side. So hope you're clear about where these each and every account has to be recorded in your solution. Now go through the adjustments. So they have given us few adjustments here. So remember, the accounts in the trial balance, it has to be recorded only once in your solution, either in your trading account or in your profit and loss account or in the profit and loss appropriation account or partners capital account or in the balance sheet. Capital items comes in the balance sheet. But in the adjustments, so these adjustments you have to record twice in your solution. Okay, so let us see first. Allow interest on partners capital at 5% per annum. So interest on capital, where do you record? You'll record under profit and loss appropriation account and in partners capital account. Okay, next interest on drawings. So where do you record? So you'll record under profit and loss appropriation account and in partners capital account. Okay, next is depreciate plant and machinery by 10% and fixtures by 15%. So we'll record under P&L account, not appropriation account. Record under profit and loss account, debit side, and in the balance sheet you have to deduct from the respective assets. Provide for bad and doubtful debt 5% on sundry debtors. So this also once come under P&L account debit side and in the balance sheet you have to deduct from the debtors. Outstanding liability where in respect of wages, salaries and rent they have given. So outstanding liability. So where do you record? So outstanding expenses it is. So it is a liability. So you have to record in the liability side. At the same time, all these outstanding you have to add in the respective expenses. Now wages comes under trading account as well as in the balance sheet liability side. Next, salaries. So you have to record in the P&L account and in the balance sheet. Next, rent also. So you will record under P&L account and in the balance sheet, where for the respective expenses you have to add this outstanding. Next, insurance was prepaid. So prepaid means you have to minus. Now where do we record insurance? Insurance in the P&L account where you have to minus and in the balance sheet it is an asset. So you have to record in the asset side of the balance sheet. Stock was valued at the end, which means that closing stock. So once you will take under trading account and once in the balance sheet, that is in the asset side. So hope you are clear about all the adjustment. As I have told you, these adjustment you have to record twice in your solution and all the accounts in the trial balance you have to write once. Now we shall begin the solution. So first what you have to prepare? Trading and profit and loss account. It is in one account. So first half will be your trading account, next half will be your profit and loss account. So you will write the heading trading and profit and loss account for the year ending 31st/12/2020. So what is the format? So your debit side is expenses or losses amount and the credit side is revenue or gain amount. Now we'll start with two opening stock. Two opening stock. Next you have two purchases and we have purchase return also. So minus returns. This is nothing but your purchase returns. So opening stock, where do we find this opening stock? In your trial balance. So let us see the trial balance here. Opening stock, how much? 30,000. So opening stock 30,000. Next, purchases. So purchases, where did we record purchases? Yes, purchases 50,000 minus returns, purchase return, that is 1,000. 50,000 minus 1,000. So 50,000 minus 1,000. So outer column 49,000. Next, see your trial balance if there is any direct expenses. So stock is done, purchases is also done. Now see here, wages 16,000. But in the adjustment we have outstanding 300. So wages 16,000, add outstanding 300. So how do you record? 2 wages, inner column 16,000, add outstanding wages, inner column 300, outer column 16,300. So hope you are clear. So whatever it is outstanding, you have to add. So outstanding wages was 300 and at the same time wages was 16,000. Next, what do you record in your trading account? Sales return, we shall record it later. Carriage inward, how much? 400. So to carriage inward, it is a direct expense. To carriage inward, and the amount is 400. After carriage inward, this purchase return we have already recorded. Any other in the trading account? We are done with the debit side. Now we shall move on to the credit side. So in your credit side, you will write by sales, and we have sales return also. So minus returns, and by closing stock. Closing stock will be there in your adjustments. So by sales less returns by closing stock. Now sales amount as 1,03,500 here minus sales return 1,200. 1,03,500 minus 1,200. 1,03,500 minus 1,200. Write the amount in the outer column. So let's see how much. 1,03,500 minus 1,200. So it will be 1,02,300. 1,02,300. Next is by closing stock. Closing stock is in the adjustment 50,000. So I have to take that also. So 50,000. Now we are done with trading account. Balance both the side. Balancing figure will be what? Either gross profit or gross loss. Now 1,02,300 plus 50,000. So this will be 1,52,300. 1,52,300 both the sides. So by seeing the debit side itself, you will come to know debit side is less. So I have written the total both the sides. So 1,52,300 minus 30,000 minus 49,000 minus 16,300 minus 400. So it will be 56,600. So 56,600. So what it is? To gross profit carried down. So this would be the balancing figure. Now continuation will be your P&L account. So bring down that gross profit. So by gross profit brought down. So how much? 56,600. Next, we will record all the indirect expenses and indirect incomes. Now we shall go through the question. So normally you will start your indirect expenses with salaries. Okay, so anything to be recorded in your P&L account? Yes, we have salaries 12,000. At the same time, we have outstanding salary 175. So how do you record? To salary 12,000 plus 175 outstanding. So to salaries 12,000 add outstanding salary. So outstanding salary, it is given in the adjustment 175. So this will be 12,175. Next, move on to the next indirect expense. We have insurance 350. Anything outstanding insurance? Yeah, we have insurance prepay. So you have to minus. So how to record? Insurance 350 minus 75. So to insurance 350 minus prepaid. Prepaid insurance, that is 75. So 350 minus 75. So this will be 275. Clear? Next, moving on to the next one after insurance. So we have commission as well as traveling expenses 850. So how do you record? So you will record to commission as well as traveling expenses. No adjustment relating to that. So to commission and traveling expenses. To commission and traveling expenses, and the amount is 850. And the amount is 850. Next is what? After commission, to rent rates and taxes 5,500, but we have an adjustment that is outstanding 200. So how do you write? To rent rates and taxes 5,500, add outstanding 200. To rent rates and taxes plus outstanding rent, that is add outstanding rent, and the amount is 5,500 plus 200. 5,500 plus 200, so this will be 5,700. So after this, after rent rates and taxes, trade expenses 600, so no adjustment, so we'll write directly to trade expenses. To trade expenses 600. After this, discount. So we have a discount of 200 and bad debts 250. So how do you write? To discount 200 and bad debts we have a provision. So how do you write? To bad debts. So to bad debts, and the amount is how much? Bad debts 250, and we have a provision PDD, correct? So that is PBD, provision for bad debts 5% on debtors. So the amount is bad debts 250, to bad debts 250, add PBD, provision for bad debts. So what is the debtors? Debtors is sundry debtors 45,000 into percentage. Percentage 5%. So 45,000 into 5%. 45,000 into 5%. So this will be 2,250, outer column 2,500. So this will be provision for bad debts. Next, after bad debts, so we have sundry creditors, it is in the balance sheet, loan balance sheet, sales, done. We have recorded few of the items that has to be recorded in your P&L account. Now let us see the adjustment. So whatever the adjustment that has to be recorded in the P&L account, whether we have recorded. Now allow interest on capital, it does not come here. Even interest on drawings does not come here. You have to take the depreciation. Depreciation on plant and machinery by 10% and fixtures by 5%. So how do you record? To depreciation. So we have two assets. So first you will take A, plant and machinery. Plant and machinery, and the next one is on fixtures. So you have to take the amount of plant and machinery and fixtures from the trial balance. So plant and machinery amount is 15,000 and fixtures is 11,000. So 15,000 plant and machinery into fixtures 11,000, and the depreciation amount or the percentage. So depreciation percentage 10% and 5%. This is 10% and fixtures is 5%. So 15,000 into 10%, it will be 1,500, and 11,000 into 5%. So it will be 550. So 11,000 into 5%, 550 plus 1,500. So this will be 2,050. Hope you are clear. Now moving on to the next adjustment. Yes, provide for bad and doubtful debts. We have taken outstanding of all the wages, salaries and rent. We have taken insurance. We have taken closing stock. So we have to take in the balance sheet other time. Now balance both the side. Balancing figure will be what? Net profit or net loss. Now see the credit side. So credit side total is 56,600. So 56,600 minus, you have to minus all the debit side. So 56,600 minus 12,175 minus 275 minus 850 minus 5700 minus 600 minus 200 minus 2500 minus 2050. So this will be 32,250. So the total or the net profit will be 32,250 and total both the side is 56,600. Okay. Now why it is net profit? Because your revenue or gain was more than your expenses or losses. So we'll record it as to net profit carried down, and this would be the balancing figure. So this profit has to be continued to your profit or loss appropriation account. The format of profit and loss appropriation account is simple. You have particulars amount, and what you have to record first. So you'll take down that net profit. So how do you take? By profit and loss account, in the bracket net profit. What was the net profit? 32,250. 32,250 is the net profit. What you have got the balancing figure here. Now in your credit side, what do you record? Only two items. One is profit, other one is interest on drawings. Coming to your debit side, you will record interest on capital, partners salary and partners commission if they have given. Okay, so this much you have to record in your debit side. Now, so let us see whether we have interest on drawings. So interest on drawings they'll give in the adjustment. Yes, they have given interest on drawings A 275 and B 190. So how do you record? By interest on drawings A, write in a column 275, B 190. So 275 plus 190. So this will be 465. 275 and 190. Let us recheck once again. So interest on drawings 275 and 190. Now in the debit side you have to write the interest on capital at 5% per annum. So how to record? To interest on capital. Now they have given the percentage A and B. Let us see the capital of A and B in the trial balance. 35,000 and 30,000 will be the capital. Correct? And the percentage is how much? Interest on capital 5%. So how to record? 35,000 into 5% and 30,000 into 5%. So 35,000 into 5%. So this will be 1,750 and 30,000 into 5%. So this will be 1,500. So 1,500 plus 1,750. So this will be 3,250. Next, let us see whether they have given individual salary or commission of the partners. Now go through your adjustments. So they have given interest on capital, interest on drawings. We don't have particularly salary as well as commission of the partners. But in the trial balance, they have given salary. So that is salary of the firm, not that of partners. So now we are done with this. So what you have to do? So you have to balance both the side and the balancing figure will be transferred to partners capital account. So 32,250 plus 465. So this will be 32,715. 32,715. 32,715 minus 3,250. So this will be 29,465. Now your credit side is more than debit side. So what it is? Profit. So what is the profit? 29,465. So where do you transfer? To profit, transfer to partners capital account. Partners capital account. Who are the partners? A and B. What is the profit? 29,465 into their profit sharing ratio. Already we have seen it is 3:2. So 3/5 and 2/5. So 29,465 into 3 divided by 5. So this will be 17,679. 17,679 and 29,465 into 2 divided by 5. So it will be 11,786. 11,786. So this will be the profit transferred to where? Partners capital account. Now we shall start with your partners capital account. As usual, your format is same. You will be having debit as well as credit side. Under debit side, particulars, and you will draw a column for each partner A and B. In the credit side also, particulars and columns for each partner A and B. Now how to begin with? We will transfer the capital. So how to write? By balance brought down. Now what was the capital of the partner? We have seen in the balance sheet, that is 35,000 and 30,000. Not in the balance sheet, in the trial balance. So if you see here, so what is the capital? 35,000 and 30,000. Next, what to record in your partner's capital account? You'll transfer this profit. So how to write? By P&L appropriation account. By P&L appropriation account. So what is the profit of A and B? 17,679, 17,679 and 11,786. 11,786. So this will be the profit. Next, what you have to record? You have to record the interest on capital. Okay. So how do you record? By interest on capital. Now, how much interest? 1,750 and 1,500. 1,750 and 1,500. Next, suppose if there was any salary or commission which has to be transferred to the partners, that we had to record, but in this problem it is not there. Now, in the debit side, so we have to transfer the drawings as well as interest on drawings. So, how do you write? 2 drawings and 2 interest on drawings. 2 drawings and 2 interest on drawings. So what was the interest on drawings? So already we have given in the trial balance itself, that is 275 as well as 190. So interest on drawings was given in the adjustment, whereas drawings they have given in the trial balance. So interest on drawings is 275 and 190. 275 and 190. Let us see the drawings in the trial balance. Now how much drawings they have given? 9,000 and 8,800. This will be 9,000 and here B will be 8,800. So only this much. Now you have to balance both the side and the balancing figure has to be carried down, which has to be shown in the balance sheet. Now balance both the side. You have to count A's column 35,000 plus 17,679. 17,679 plus 1,750. So this will be 54,429. 54,429 minus 9,000 minus 275. 45,154. 45,154 and here it is 54,429. Now calculate that of B. So B is 30,000 plus 11,786 plus 1,500. So 30,000 plus 11,786 plus 1,500. So this will be 43,286. 43,286 on both the side minus 8,800 minus 190. So this will be 34,296. 34,296. Now whatever the balancing figure you have got here, this has to be carried down. So to balance carried down. This will be the balancing figure shown in the balance sheet. Now whatever you have carried down, bring down that balance. So by balance brought down. and the amount will be 45,154 and 34,296. So this is how you are going to prepare your partner's capital account. So balancing figure you have to show in your balance sheet as capital. Now we shall start your balance sheet. So you will write the heading balance sheet as on 31st 12 2020. Now whatever the items you have left out in your trial balance as capital items, you have to take in the balance sheet on both assets as well as liabilities. Now first we shall go for your trial balance. Yes, so we have taken this capital in your partner's capital account, drawings also. Now we have to take the sundry debtors 45,000, but we have PBD, provision for bad debts, correct? So how to record 45,000 minus, so your PBD was 2,250. So 45,000 minus 2,250. Sundry debtors 45,000 minus PBD, that is 5%. So it will be 2,250. So 45,000 minus 2,250. So this will be 42,750. Next one, after this, let's see the next one after debtors. So we have plant and machinery 15,000. So we have depreciation also. So plant and machinery 15,000 and depreciation. Depreciation is 1,500. Plant and machinery, that is 15,000 minus depreciation 1,500. So 15,000 minus 1,500. So this will be 13,500, where we got 10% depreciation after deducting 10% depreciation. Next one is after this fixtures and fittings 11,000, but we had depreciation also. So fixtures and fitting depreciation was 550. So fixtures and fittings. Fixtures and fittings 11,000 minus depreciation was 550. So 11,000 minus 550. So this will be 10,450. 10,450. Now coming to the next one after fixtures and fittings. Next, yes, we have cash in hand and cash at bank 350 and 10,000. So cash in hand and cash at bank. Cash in hand, that is 350. Cash at bank, it was 10,000. Cash in hand and cash at bank. So after that purchases, it is trading account. Next is balance sheet is bills payable and bills receivable. Bills payable was 12,000 and bills receivable was 14,000. Bills payable 12,000. Bills payable is liability. Bills payable 12,000 and bills receivable is asset. Bills receivable 14,000. After bills receivable and bills payable, next what you have in your balance sheet? Yes, we have sundry creditors 39,000. Sundry creditors 39,000 and loan 10,000. Sundry creditors 39,000. Loan is also liability 10,000. Loan 10,000. Next, any other items you have recorded here? That is, we are done with this. Yes, almost all the accounts, what they have given in the trial balance, we have recorded in the balance sheet. Now, let us see the adjustment. Allow interest on capital will not take in the balance sheet. Interest on drawings also, because we have taken twice. Depreciation already we have deducted. Provide for bad and doubtful debts 5% we have taken. Outstanding. So, these are liabilities. So, outstanding wages, salaries and outstanding rent. So, you have to take outstanding wages, outstanding salaries, and outstanding rent. Now, let us see the amount now. Outstanding wages 300, 175 and 200. 300, 175 and 200. So, these are all what? Liabilities. Next, what they have given in the adjustment, insurance was prepaid. So, it is an prepaid expense. So, it is an asset. So, prepaid insurance 75. Prepaid insurance, that is 75. Next, we have closing stock. It is also an asset, 50,000. Closing stock, that is 50,000. So, almost all the adjustments are done, but we have not written the capital. So, we shall write the capital here. That is in the liability side, capital. So, we have two partners, A as well as B. Now, which capital do you record? The balancing figure what I have got here, this capital you have to take. That is 45,154, 45,154 and 34,296. 34,296. Let us total now 45,154, 45,154 plus 34,296. So, total will be 79,450 plus we shall count all other liabilities plus 200 plus 175 plus 300 plus 10,000 plus 39,000 plus 12,000. So, we shall count it once again, 12,000 plus 39,000 plus 10,000 plus 300 plus 175 plus 200 plus 79,450. So, this will be 1,41,125. 1,41,125 in the liability side. Let us check the asset side. 42,750 plus 13,500 plus 10,450 plus 350 plus 10,000 plus 14,000 plus 75 plus 50,000. So, this will be 1,41,125. 1,41,125. So, both your assets and liabilities are same, which means that our balance sheet have tallied with the right amount, that is 1,41,125. So, this is how you are going to solve a 15 marks problem under part C of your question paper, where you have to prepare your trading account, profit and loss account, profit and loss appropriation account, partners capital account and balance sheet. So, my dear students, hope you have understood today's session. See you all in my next session with a new concept. Till then, take care. Thank you.